Hi, I'm Max Keiser. This is the Keiser Report. The frauds get more brazen. The amounts being stolen get bigger. Regulators are now just walking away as total financial chaos envelops the globe. Stacy.
Yes, Max. It's a tale of the good, the bad, and the Schwing Schwing. And I want to cut to this little clip here that was made by RGB Anarchy. And to set the scene for you, Max, Jamie Dimon is gathering up the silver to cover all his naked shorts, and in comes...
It's all ours, bloody! You're joking, Blondie. You wouldn't play a joke on me like that.
It's no joke, it's a rope, Duco. I want you to stand up there and put your head in that noose.
Yes, Max, it's Sheriff Schwing Schwing Keiser. Well, you know, there's another success in the whole good, the bad, and the Schwing Schwing market, and that's congratulations, Occupy Wall Street. You're officially making companies scared. The CME Group, in their Take-Q filing, noted these risks. In connection with the continued economic uncertainties, groups such as Occupy Wall Street and Anonymous have targeted the financial services industry as part of their protest against the perceived lax regulation of the financial sector and economic inequality.
Yes, exactly. This is fantastic news because the Occupy Wall Street movement and Anonymous needs to get that word risk and risk adjusted and risk factor in as many financial documents as possible. The CME out in Chicago, they're not regulating anybody that they're supposed to be regulating. That's incredible risk to the overall economy. And of course, I saw the headline of Business Insider, and I think that the reason they put that up there was to suggest that, oh, Occupy Wall Street, now you've gone and done it. You've actually caused the poor CME group to have to suffer some kind of disclosure that they are, in fact, terrorists. Oh.
Well, we're going to go over two headlines now, Max, which will show that, in fact, they are, okay? Because they mention that it's perceived lax regulation, that these protesters perceive them as having lax regulation. Well, let's look at the reality. MF Global's missing funds may be massive ploy, CFTC's Chilton. So the $593 million shortfall in client money at MF Global Holdings, the broker that filed for bankruptcy on October 31st, appears to result from a massive hide-and-seek ploy, says Bart Chilton, a commissioner at the U.S. Commodity Futures Trading Commission.
Yeah, well, I've covered this on this show before. I call it peekaboo accounting. This was the same thing in Lehman Brothers, and it's used all over Wall Street, all over the world. When the regulators come in to record your end-of-the-quarter liabilities, you simply move it off your balance sheet for a few days with the complicity of another corrupt hedge fund or broker or banker, and then when the regulators move on to the next company, you move it back onto your balance sheet as a reciprocal arrangement with the other corrupt bank or broker or corporation. All corporations do this. General Electric does this. IBM does this. Warren Buffett does this. All the firms on Wall Street do this. They all engage in accounting fraud, peekaboo accounting. And MF Global was caught right as they were in the process of committing accounting fraud, and suddenly that unraveled. The little string was pulled and suddenly went bankrupt. But you can do the exact same thing at almost every single company in America. They're all basically based on accounting fraud. You pull the little string and they all go to zero.
And why this relates to CME Group, of course, is that they're supposed to be, or they were supposed to have regulated MF Global, but obviously they didn't. And Bart Chilton goes on to say, this isn't just a lost and found inquiry. It's a full-on effort to get to the bottom of what appears to be a massive hide-and-seek ploy. It's a distinct possibility, some would say probability, that somebody has done something with the money, and that it's not going to be all of a sudden discovered and an innocent explanation.
Well, of course, that money was just play in this massive shell game that is the cause of 2008 crisis. It's the cause of the global financial crisis. Remember, Goldman Sachs got Greece to play a shell game with their debt. And now they've lost their sovereignty. Now you've got loss of sovereignty with Italy coming up as other countries move in to try and steal their gold. So this whole Ponzi scheme and peekaboo accounting is endemic throughout the entire system. And of course, without any growth anywhere in the world to offset these massive debts, this is only going to get worse.
Now, CME Group blames Occupy Wall Street and Anonymous, but I think you can blame it on blatancy and blatancy of corruption here, because look at this. MF Global customers can't get cash or answers. Now, this is from Bloomberg, and they're looking at the top 1%, the clients of MF Global and therefore the CME Group. They talked to a 48-year-old New Yorker, Ted Monger, who has had $27,252 frozen in his MF Global account. And he says now that he's thinking about closing his 3 other brokerage accounts because he said, quote, "I'm a high net worth person and I don't want to see $1 million get smoked by another misunderstanding."
This is the thing about the high end, the top 1%. Now they're getting their accounts obliterated by the same terrorists because there's no barrier between them and the money that they're supposed to be the custodian of. They're just completely stealing out of people's accounts now.
Now this guy, Ted Monger, that they talked to, he said he thought the Securities Investor Protection Corporation, he thought it covered any losses due to a meltdown such as that at MF Global. He's now been told SIPC may not cover the money because it was a futures account and faces months of uncertainty as he files a claim seeking recoveries.
Right. Over the past 10, 15 years, all these groups like SIPC or SEC or FDIC are all been undermined by new regulations that supersede them, that make them essentially ineffective and have no regulatory authority whatsoever. And people are now finding this out. They thought their accounts were insured against the broker stealing the money. But now they find out at MF Global that no, the brokers can steal your money and you have very little recourse. And the broker, by the way, has been using your money to make these incredible bets. I mean, Corzine basically leveraged the firm's capital by 50 to 1 or so, paid himself $100 million or so, then extracted that out of the company, and of course the Ponzi scheme collapsed. He stole money. The guy's a thief. Of course, he used to be running Goldman Sachs, so he went to like the professional school of thieving.
Now, SIPC, I want to go over this for the audience here, is a private government-sponsored company that insures brokerage accounts for up to $500,000 in securities with $100,000 for cash in case the brokerage firm goes bust. While SIPC covers losses in stocks and bonds, however, it doesn't cover commodity futures contracts unless defined as specific property under certain conditions.
Right, under certain conditions. I mean, the difference between stocks, bonds, and commodities and futures contracts is now virtually impossible to distinguish because they've all blended into hybrid securities and hybrid trading done on dark exchanges. So now SIPC can say, well, we technically don't cover that because by definition, the securities that we do cover don't fulfill our particular definition. And your recourse, by the way, every time you sign up a new account at any of these brokerage firms, I know when I was working on Wall Street, the second you sign off and become a client of a brokerage firm, it binds you to arbitration by a panel of brokers if you have a complaint. The track record for the industry is less than 2% of people who have their money stolen see anything back.
Monger is one of the many customers who can't access cash in the segregated accounts they once thought were safer than bank deposits and just as accessible. So this insurance product, the SIPC, this private government-sponsored insurance, they thought made them safe. Just like all of these investors, well, it goes back to John Corzine investing in in bonds for European sovereign debt. When everybody there thinks they have credit default swaps, this is another insurance product that people think protects them from their bets.
It goes back to Merrill Lynch because during the late 70s, early 80s, they created this Merrill Lynch combined account of a money market. The whole creation of the money market account was a way for brokers like Merrill Lynch to compete with banks. And then they got the government to create this quasi-governmental, not terribly regulated seal of approval that said these money market accounts are insured, quote-unquote. And Merrill Lynch and other wirehouse firms, big Wall Street firms, siphoned billions from the banks because hot selling brokers would call people up and say, oh, your money's stagnating at the bank. You got to be in the stock. Come over to Merrill Lynch. So now we're finding out that all of the support mechanisms that are supposedly keep this cash safe as it in the bank are in fact faulty, that in fact you don't have access to these funds, that the brokers have a license to steal, and this guy's never going to get his money back, and he should be unemployed soon. He's one of the 1% now. But you have to move from talking about the 1% to talking about the 1% of the 1%, because everyone else in that category is not going to go bankrupt.
Well, I'm going to talk about the 1% of the 1%, because in fact, they aren't protected either. When the whole system is fraud, when they exist in a system of fraud and they themselves perpetrate the fraud, they ultimately end up becoming victims of the fraud themselves, because they talk about other clients of MF Global and therefore the CME Group, and they also have been frozen out, including the NYMEX brokers here. So they speak to a New York Mercantile Exchange trader, David Rosen, and he said, quote, "We didn't think we were just customers. We're the ones in the pits providing liquidity so everyone around the world can trade these products." So there you go, Max. They stood aside. These NYMEX traders, they throw things at, Occupy Wall Street protesters and say, get a job. And they don't do anything when those guys had their pension funds, all their Joe Bag of Donuts money stolen. And when they come for their money, when they come from the top 1% of the 1%, who's around to save them?
Yeah, MF Global is like the mafia guy who turned state's evidence on the kingpin of the mafia, because you can't freeze out the NYMEX from the underlying criminal racket that's going on. Because the NYMEX is one of the primary planks that keeps the syndicate up and running, this criminal organization going. So it's like, if you turn in and you tattletale on the dawn of the mafia, you're going to ruin the whole money-making enterprise of the mafia. So you can't let the NYMEX leave it out and hanging. It just shows you how bad the situation is, that MF Global would, in effect, put a knife in the back of its very own criminal syndicate operator, NYMEX.
But, Max, if all of these traders, if even the NYMEX can't trust the system, and they can't trust the John Corzines of the world to not steal from them, they count on a system which you only steal from the pension funds and the passive traders, not stealing from the active traders. And that's where they're going after, the active funds now, it appears.
Yes, this is a very important story because it marks a new chapter in this crisis, in my opinion. Remember, first it was a liquidity crisis. Then it became a solvency crisis. Now it's becoming a systemic crisis. The underlying fabric of the global markets, the thing that keeps them running, is now crumbling before our very eyes. And this is a new chapter in this whole 4-year collapse that was completely avoidable had somebody in any governments, any of the G20, simply stood up and said, we are going to apply the existing regulatory laws to keep these guys in line. All right, Stacy Herbert, thanks very much for being on the Keiser Report.
Thank you, Max.
Don't go away, much more coming away, so stay right there.